Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is CEO of Paramount. This is Rachel Goldman with us today, who I've known for the last 3 years, and the ticker is PZG in the States. Hey Rachel, welcome to the show.
Thank you, John. Really happy to be here with you.
So Rachel, could you give us a 10-minute overview or so of not only, the company and the opportunity, but the October 5th news that you had?
Yeah, absolutely. I think what I might do is I'll just pull up one kind of overview slide, and
Sure.
I'll move on to another one after. So yeah, Paramount. I mean, we're a U.S. domiciled company. We're U.S. listed, as you mentioned. PCG is the ticker, and all of our assets are in the U.S. So we're a little bit unique from that standpoint. But I would say I think that's also part of the reason why we've been flying under the radar a bit, because as a US listed microcap, we don't fall into any of the traditional mining indices. And, there's also a lot of our pure companies, I'd say, are listed either in Canada or Australia. So this is where sometimes you can find really good gold nuggets between the cracks here, and I'd like to think that we're one of them. But so this company started just over, I guess, about 12 years ago now, 13 years ago. It was a spin out from the predecessor company, which was called Paramount Gold and Silver. And Paramount Gold and Silver was acquired by Core Mining in 2015. And at that time, spun out this Paramount, named Paramount Gold Nevada, because we have the big sleeper property in Nevada, which I'm going to get to in a little bit. But at that time when we were spun out, the gold price was about 12 or 12.50, and Sleeper is a very large but low grade property in Nevada that does need higher gold prices than 12.50. And so the following year, we acquired the Grassy Mountain project in Eastern Oregon. And since that time, Grassy's really been the focus of the company. So we've been advancing it through a number of different studies, culminating in 2 feasibility studies and moving through permitting. And what I'll say about that is we are basically the first project ever moving through the permitting regime in the state of Oregon. So, that's
Right.
something that's taken more time, costs a bit more money, but has given us a first mover advantage in the state.
Sure.
So when I say we have over 4 million ounces of gold resources, those accrue about 3 million to Nevada and 1 million to Oregon. And then what I would maybe point out in terms of our shareholder base here, which is something that's, we've had a very supportive and patient group of shareholders who've really helped us through this process of, again, being the first ones to move through this permitting regime in Oregon. But some names you might be familiar with here. Seabridge Gold certainly is a name that's probably familiar to a lot of people, because this is another Canadian publicly listed gold company. Seabridge has been incredibly supportive of us. We have a number of Seabridge representatives on our board as well. And Ausenco, I always like to give a nod to, because they're a globally, very well renowned engineering firm that led the feasibility study on Grassy. And at that time, they elected to take stock instead of cash for the work that they did. So that was how they came about their shareholding position. So as you mentioned from the outset, I mean, just for very high level, while we've been advancing Grassy, we have been nurturing Sleeper in our portfolio as well. But, as I said from the outset, with a $1,200 gold environment, Sleeper wasn't economic at that time. But now, fast forward to today, when we're looking at a $19,000 or $2,000 gold environment, it starts to look a lot more interesting. And so while we've been somewhat capital constrained about where we can allocate, we think Sleeper is something that has a lot of value that isn't recognized in the stock. And we also think that there's a great opportunity here with the advancements that we've been making in the state of Oregon to see value for Grassy recognized as well. And so the news that you were referring to, I'll just see if I can switch slides here. Just recently, so on October 4th, so just about a couple of weeks ago now, we had the permitting agencies in the state of Oregon. We can talk a little bit more about permitting, but permitting agencies finally came to what they called a completeness determination. So basically saying that, yes, after this almost 2-year review period, which I'm sure you can imagine was pretty long and stressful for our team, and in some cases for our shareholders too. But after this almost 2-year review period, they came and they said, you know what, your application has everything in here that we need. And this wasn't us sitting on our hands waiting for them. There was a lot of collaborative work that went into getting the application to this point. But essentially why this is so critical for us is twofold. Number one is that with the completeness determination, there'll be a follow-up, which is called a notice to proceed. So it's really more of a formalization of announcing that this application is complete. But once that notice to proceed comes, it starts a clock on these agencies where they have 1 year to issue final permits. And during that year, we'll have a number of other permitting related catalysts that will allow us to see for ourselves and demonstrate to the market that this process is working. So one of those will be the completion of environmental evaluation that we expect to happen in early Q1. And then about 7 months after that, there should be the issuance of draft permits and any permit conditions. And then there's a couple of other steps related to public consultation and whatnot prior to the issuance of final permits, which we can sort of soft circle, we'd say, for the end of next year. I'd say sort of December 2024 or early 2025. And the significance of this can't be understated because, again, none of the agencies have ever gone through this process before. So it's really, there's a significant amount of handholding, but there's also, an opportunity to help them understand their own process and where maybe there are some hiccups or things that should be streamlined better in a future process. And this is where we've really gone out of our way as much as possible to be a good corporate citizen, if you will, to them in this process, rather than having an acrimonious relationship. And it's definitely worked to our advantage. But the second thing that's an important catalyst for Paramount specifically with this notice to proceed, beyond having visibility that we'll actually get permits to be able to start building and operating Grassy, is that we've also structured a financing with Sprott Streaming. So this is obviously a very well-known name in the resource space. Through their royalty and streaming group, we announced back in March that we had a term sheet for $15 million financing. So it's non-equity dilutive. The only equity component to it is that it starts off as a convertible note where we'll pay. We have at our option the ability to pay the interest in shares or in cash. Small companies that don't have a lot of cash generally pay in shares where they can. But then once Grassy's in production at Sprott's option, they convert that into a royalty directly on Grassy. In the last 2 to 3 years has been excruciatingly challenging for small companies to be able to raise capital, raise the kind of patient capital that's required for a number of, different stages of projects. And so I consider that we're very fortunate to be able to bring a group like Sprott in on this kind of deal. And the fact that they were willing to advance funds on the notice to proceed also means that they are taking on some permitting risk as well. Because although we feel very confident about this process through the draft permits and then final permits a year out, there's always a what if. And but a partner like them who understands enough of the process and was willing to come along on this ride for us, obviously is really beneficial for us too.
Of course, yeah. I mean, obviously Sprott's a huge name in the space, and 15 million for a small company with a smaller market cap is significant. So what did Sprott see in Oregon? I mean, obviously Nevada is the #1 mining state in the US, but what do they see in Oregon to help them get to that kind of a commitment?
Well, I think what they see is that the project economics are very robust, right? And
Mm-hmm.
I can bring you through sort of some of the feasibility slides that outline those economics. But suffice it to say that it's a robust project. The payback will be pretty quick. I mean, we'll be able to pay back the construction, overall construction, which should cost somewhere around 135, 140 million. So, I mean, it's kind of bite-sized, even for a company our size. This is something that could be managed through, a combination of project debt and equity. But and that should pay back, depending on our commodity environment, somewhere between 2.5 and 3 years. which is a pretty quick return. And, I
Sure.
think to your point about Nevada, Nevada is pretty, it's very well picked over. I mean, if this project had been in Nevada, it would have been mined out a long time ago. And the only
Yeah.
reason that it hasn't been is because it's in a state that doesn't have the same type of, mining history, or in some cases, mining infrastructure. And frankly, that's part of the reason we were able to get it, because small companies, let's be honest, don't usually get the pick of the litter when it comes to projects develop. So you have to choose what type of unknown or what type of risk are you willing to take on. And in Paramount's case, having gone through in quite a bit of detail, obviously in terms of their own due diligence at the time when the decision was made to acquire Grassy, understanding that permitting regime, that even if nobody had done it, it felt doable, it ticked all the boxes. But more importantly, I mean, we're looking at a very clean metallurgy and geology at Grassy, because those are things you can't change. No amount of legal wrangling is going to change what Mother Nature put in the ground. And so, I think Sprott liked the project, liked the economics, understood how much work had gone into already getting it to this point. Because although this was the first significant news we were able to put out, there has been years and years of work going into even getting us to this point. So I think they looked at it as an opportunity to get exposure to a project that can be built, that will make strong returns, and that the owner of was willing to let them share a piece of along the way.
Sure. That makes sense. Okay.
Mm-hmm.
Do you want to finish this slide and then we can maybe look at some of the economics of that Oregon project?
Yeah, for sure. So, I mean, really, like I said, the biggest news for us was the October 4th
Mhm.
from the completeness determination. The notice to proceed, we are expecting to come next month.
Okay.
And this is, we have pretty good indications from the permitting agencies that, we'll be in a position to receive that. So this is a document that comes from DOGAMI. This is the Department of Geology and Mineral Industries. They're somewhat of the coordinating agency for all of the other permitting agencies. And,
Mhm.
once a completeness determination has been reached by the permitting agencies, the DOGAMI has the opportunity, will issue this. I mean, they're by statute, they are obligated to issue it. And, we know that there's already a draft of this agreement. We understand the contents of it. And, it's really more of an administrative step in a way. But like I said, the importance of it is that it does start this clock on the agency. So they do need to make sure that all the right, final boxes are ticked, if you will, before they do that. The closing of the Sprott deal, I mean, we've been working at going through the final kind of phases of the documentation with them. Again, this is about 9 or 10 months of due diligence has already gone into this deal. So all the legal due diligence and technical due diligence, site visits, and all that stuff has already happened. So now it's really just fine tuning the actual legal documents to make sure that everything is appropriate. And so we think that we should be able to close that this in Q4. And what that will allow us to do is then to pay off, we have a convert that's outstanding. It's $4.3 million. This was something that we entered into in 2019. And we just recently were able to negotiate with our note holders to push maturity out to next September, so September 2024, but with the provision that as soon as we close this funding with Sprott, we pay it off sooner. And so
Okay.
that satisfied everybody. And again, I was very grateful to these note holders who are also been very supportive of our journey, understand what we're doing, understand that in the end, we're probably, a month or two off of what the initial intention had been, but, it'll be good to get that debt parted with. And we
Sure.
have a little bit of other debt too that will pay off along the way. So outside of that, as it relates to the NOI, so that's the federal side of the permitting. So we essentially go through 3 levels of permitting at Grassy. We have the county level permitting, which we've already received everything we need, basically everything we need, including having our conditional use permit was renewed, simply because the state process was taking longer than anticipated. The state process we've just talked about a little bit. And then on the federal side, we had our plan of operations approved by the BLM last November. Now that it's a better understood process at the federal level, it doesn't have specific timelines like the state of Oregon. And so again, the best indication we have right now is that that NOI, the notice of intent, which is issued by the BLM, should be entered into the federal registry also in Q4, which basically kickstarts their process for issuing permits as well, which, I'm not sure that the timing will perfectly align with the state, but, it'll be just great to have both underway and moving along.
Sure.
And I think I'd already mentioned that one of the steps in on the way to final permits at the state level is to see this environmental evaluation, which is currently being conducted by Stantec, another well-known engineering firm, on behalf of the state of Oregon. So that has no involvement from Paramount other than paying the bills, but that also should be coming out in the first quarter.
Okay.
Okay. Great. So if you want to talk a little bit about the economics on Grassy.
Yeah, please.
Okay. So maybe just for interest, for anybody who hasn't been out to Eastern Oregon, because that's where we are, right on the border with Idaho, it looks very familiar to Nevada, very similar, but similar terrain and similar kind of layout with, I'd say, obviously markedly less mining projects sitting there than we do see in Oregon. So this study, this was the second feasibility study. It was completed in September of 2022. So it's really pretty fresh. I mean, the first one we had done was in September 20. We had to update this because we, as a US listed company, we had to comply with these new SEC rules called SK 1300. But it actually allowed us the opportunity to kind of fully bake the feasibility study for the really hyperinflation that we had between 2020 and 2022. So I'd say I'm pretty comfortable at this juncture with the numbers that stand here as them being quite current. So I'd mentioned earlier, we have 1 million ounces in Oregon. In spite of having 1 million ounces there, we are starting initially and for the foreseeable future with just a very small high-grade underground mine. So that's just under 400,000 ounces at 6.8 grams. I will show you a nice little image of the cross-section of the deposit too, and it will kind of underscore this point that previous owners of this property, because it's been around for many decades, it's traded hands a bunch of times, including Newmont owned it for a period of time. They probably invested twice our market cap now into it, development work. But it was always viewed as a great open pit target. And the truth is it could be a good open pit target as well. However, understanding that we're the first ones going through the permitting regime in Oregon, this is why we decided to pursue this small underground mine instead. So, it'll be a small operation, about 50,000 ounces of gold equivalent annually. But at the study metrics that we ran, that gives us an initial 8-year mine life, which I do see a number of opportunities for mine life extension. And more importantly, it'll generate about $20 million of after-tax free cash flow. So more than our current market cap and annual free cash flow, which is great to see.
And that free cash flow of 20 mil is based on what kind of a gold price? Is that what we're looking at here?
Yeah, so that's on the base case of 1750. So certainly anything higher than that, and obviously we see commensurate increases in the free cash flow, in the internal rate of return. We represent everything here on an after-tax basis, the NPV, and then obviously the payback shortens as well with the higher gold price.
Yeah, it's really interesting. AISC there, very, very low compared to the average out there now is, I think, over 1,200 an ounce.
Yeah, yeah. Well, and that's just it. So, I mean, this is why I said earlier, if this project had been in Nevada, it would have been long mined out. And it's only because it's in a state where there's less familiarity and less of a comfort level, I guess, around development that we had the opportunity to pick it up. But I think this also means that this could be a project that would fit into a lot of portfolios down the road. So whether it's Paramount who ends up developing it on our own, whether it makes more sense to bring in a partner, or whether it makes more sense to transact it at some point, the truth is, though, nobody else, I don't believe at this juncture, could get it over the permitting line the way we have. And, and this is going to be really our best value creating opportunity moving forward.
Yeah, I agree. You guys have done a great job of staying on top of things and the permitting process and to get where you got with the news October 5th took, how many, what was that? How many months of time was that for you?
Well, yeah, I mean, we made our first submission to the state of Oregon was made in November of 2019, if I'm remembering correctly.
Oh, yeah,
Yeah, and that, we get the initial round of feedback. We made our second submission in December 2021. So it's really from December 2021 until October, and that's why I said it was almost 2 years of that review. But the
gotcha.
review at that time becomes this sort of working as a team in a sense with the agencies where they ask for different things or want things positioned somewhat differently. I mean, there wasn't anything that was a major structural change to the project or anything of that nature. It's really more just making sure that our application complies with all of the various regulations for the different agencies there. So it's really quite an endeavor to get it to that point.
Absolutely. Can you go back to slide 6 for just a sec?
Sure.
So I just want to point out to everyone that, when you look at this, 70 miles from Boise, Idaho itself is ranked the seventh best jurisdiction as of the end of last year, globally.
Right.
So this isn't necessarily near Portland, right? I mean, can you give us an idea of
Oh
this looks
no.
very rural.
Oh no, I mean, if you've ever been to Oregon, and I didn't know this until the first time I went, they say there are two Oregons, and they are not kidding. Because the West, I mean, you could never build a mine in the West, in my opinion here, because,
Right.
it's far more densely populated, it's coastal, there's obviously a much more left-leaning, environmentally focused population in a sense. Whereas here on the East, you're right. First of all, it's way more sparsely populated, and it's very Republican, and it's also very poor. And so
Okay.
really the two biggest kind of employers in a sense in our region is there's a prison and there's onion farming and there's not a whole lot else. And so there is a lot of enthusiasm at the county and state level to see this project move forward because we'll create a lot of very, very well-paying jobs. It'll be about 300 construction jobs and then probably about
Hmm.
100 full-time jobs once it's up and running. And you could argue that construction jobs are transient, but that all that construction activity spurs economic activity. And then once the mine is running, there are a number of different ancillary type industries and businesses that pop up to support a mining operation. But I mean, if the people that will be working at this mine will make roughly twice the median average for our part of the state, so it will really make a big, big difference. And this is why at the county level and state level, we've had tremendous support from all the local businesses, leaders, and politicians through all levels of government, which has been great to see.
Yeah, absolutely. That's exactly what you want to hear, because when people think of Oregon, they do think of the other part of Oregon that you just mentioned, right? And they
Oh
may
yeah,
not understand any of what you just said. So,
yeah, yeah.
before before stating that, so it's great to have these kind of images to, for investors to look at so they understand better, what part of the state it's in.
Well, there's that, and I mean the other thing I like to point out is there is really nothing around us. So although we're
Mhm.
close as the crow flies to these population centers, when you're actually up at the project, I mean you can't see or hear anything. There are no farms, houses, or anything right nearby that are going to be impacted by anything that we're doing.
Yeah, that's really positive.
Hmm.
Okay. So we were on slide 8.
Yeah. Um, so yes, so this was the deposit image that I wanted to share with you. Because if you look at this, essentially what I want you to notice is in the kind of purpley blocks,
Mhm.
that is the low grade material you can see on the scale there. And that's only about 50 meters from surface. And then the mine that we're building is really anything that's over 3 grams here. So in this hot pink, and that's only about 150 meters from surface. So this is where you can see that, previous owners of this deposit said, oh, this is great. We'll just one big open pit and drive on, so to speak. But, for us, the economics, fortunately, on the small underground mine work very well, as you saw, but where we can see opportunities for mine life extension are, first of all, there could be some opportunities for finding more higher grade at depth. We do already have some near mine exploration targets that have been identified. And certainly, I mean, once you move into a production scenario, you can see a lot more material that's not contained in the current mine plan, get mined and processed as long as the economics work. So, I feel pretty confident that this is something that will last materially longer than 8 years. The other point being that, when a small company, when you're drilling off an economic reserve, you kind of drill to the point that you have to. And if you're looking to move it into production, you're not going to continue to drill without getting some benefit from it. So, there will certainly be other opportunities for us to do some additional underground drilling, for example, once there's a decline sunk and prior to moving into production, it makes sense to try and drill off additional of the high grade as well.
Okay.
Okay. So if you want me to just flip, the only other thing I'll leave you with here, perhaps, permitting. I did promise we would talk a little bit more about permitting if you want. I mean, we covered a lot of this, but I think two things that that are very important to note is, I mean, we did talk about the time-based approach. And although we came through a sort of ambiguous, almost 2-year review process, other phases of the permitting regime, there is a specific time allocation on the agencies to respond. So, for example, I mentioned the 1-year clock from the notice to proceed to final permits. I mean, this is written into their statute. Most permitting jurisdictions, you don't see anything of that nature because there isn't usually that type of commitment. And that's not to say that there can't be, there's no room for other questions to come up or things that we deal with, but at least you're starting with a framework where they have a fixed time to respond. But the other thing that's important to understand from a Paramount standpoint is Oregon is also a pay-to-play state, meaning we reimburse these agencies for the costs that they incur in working on our permits. And that is really the main reason that we haven't done much outside of the state, even though we do have, as I mentioned, the sleeper property in Nevada, because the permitting costs can be lumpy, somewhat difficult to forecast, and we just need to make sure that we keep the machine running and that nothing slows down because we're running out of capital. So, we've been pretty laser focused on keeping that moving along. So really this is more just the graphic representation of what I mentioned already. Completeness determination came October 4th. We're hoping the notice to proceed will come in November. The indications are good that it will come in November. The environmental evaluation should come early Q1. Draft permits should come, no more than 7-8 months after the environmental evaluation is complete. And then the final permits would be, probably 140 days after the draft permits and 1 year after the initial notice to proceed was issued to us.
Okay. So,
Yep.
Got it. So we're looking at final permits on the far right there, probably December of 2024 or January of 2025.
I think that's fair based on the information that we have today and based on the statute in the way it's written. Yes.
And so then can you just give us a ballpark like rundown of how things proceed from there? Because things are looking good, it sounds like, to get to that level. So then what do you see in terms of if you go back to one of the slides, you showed us a CapEx of around 136 million. You were talking, I think, earlier about funding that with part debt, part equity. I know you can't get into exact details right now, but that seems to be a reasonable number versus some of the other CapEx numbers I've been seeing, from projects with this kind of a mine life.
Yeah, no, absolutely. And so the other place where this kind of timing process helps us is that because we have an opportunity to receive draft permits. So by the time we get to draft permits, we'll have visibility that there's a bankable feasibility. There are draft permits in hand. It's a great opportunity to then lock in. For example, we can lock in at what's called a guaranteed maximum price with, Ausenco or whoever else gets the EPCM, but I'd say they're probably in a pretty good position. And that becomes a tool. A guaranteed maximum price becomes a tool that then you can use when you're soliciting, project financing terms. The rub in the last couple of years is that when you used to go out to quote these things, say they were good for 90 days, but then it shortened to 60 days. In some cases now they're shortening to 30 days. And so you really have to be ready to pull the trigger before you go out and ask for these bids, because they're getting stale pretty quickly. And again, I think this is a reflection of this like hyperinflationary environment that we've been in, an environment where there's a shortage of different types of labor and so on. But from our standpoint, because we'll have this period of time between draft permits and final permits, about 140 days, this is a perfect opportunity to make sure that all of the work that we'll do ahead of that in terms of soliciting different types of not bids for the construction exactly, but the different funding bids that will exist out there. That'll be a great time frame to do it, and then with final permits kind of hit the go button and go from there. And construction should take 12 to 18 months. There could be some, depending on how the draft permits are written, it's not impossible that there's some type of work that we'll be able to do ahead of final permits, maybe related to the power line upgrade or road upgrades, things like that aren't ore touching or chemical involving. But from a Paramount standpoint, obviously it will depend on where we are in the life cycle in terms of securing capital and how much we want to spend prior to final permits. But all this to say, 18 months, I'd say on the outside would be the construction period before we go into production.
Okay. Well, that's a great overview on Grassy. Do you mind if you have any slides on Sleeper, just showing
Sure.
us a little bit about that? I know you and
Yeah.
I had dinner with Don Durrett back in April when we were out west at a conference together, and he's really excited about this project and the potential there. So
Yes, I mean Sleeper has an amazing history because it was producing in a low gold price environment. It was producing from a 7 gram per ton vein through an open pit heap leach and mill scenario. So for a 10-year period, it produced close to 1.8 million ounces and was minting money essentially, even in a low gold price environment. And so, we don't currently have 7 gram per ton material. Otherwise, we probably wouldn't spend a lot of time talking about Oregon. But what we do have here is already what I would call, a very sizable starting position in a sense, because there are a lot of companies that have land positions in a state like Nevada, but there's no history behind it. And what we have here is a humongous land position. I mean, so we have 40,000 acres that are largely contiguous. If I can point your eye to this little yellow blob here, that was actually the old producing pit. And so you can see, just the scale of the land position that we have versus that pit that produced close to 2 million ounces. And we have already 3 million ounces identified on this property, again, all within the old pit, but much lower grade. I mean, it's at a 0.35, let's say, is the average grade for the resource here, but the indicated. But there is certainly potential to see better grades coming into play here, which I'll get to in a sec. But the important thing for us is that this resource that exists here, we recently updated the resource, bringing it up to, I'd say, modern standards. So there was a historic resource on it in and around the same level of ounces and grades. However, it had been built in 2010. And when it was built in 2010, they were using data. I mean, in some cases, it's 40 years old. And, what's interesting about that is 40 years ago, they didn't digitize things. And so when we went in to upgrade the resource, again, to bring it up to modern standards from a QA/QC standpoint, to comply with the SK 1300 rules, this is where it actually meant that we needed to start from scratch and build this resource database first before the resource engineers were using MDA, now called Respect. They worked on this with us to generate this resource. So happily, that work finally got completed. We'd started during COVID, and of course, COVID slowed everything down. I think sometimes it's because you couldn't have too many people working around the same bench or
Right.
lab or whatever. But I mean, those days happily are gone. But, so we do have, a big resource here that's already, I think, a fantastic starting point to do further work. And, we've been doing the reclamation work at Sleeper over the last, decade or so, and have even won awards for the reclamation work that we go there. So that's ongoing. I mean, we make sure that we keep the asset in very good standing, both with the regulators and, as the asset, because there's a lot of value here. But so
Sure.
the other thing I would say is that, although generating this resource and building the database was a big amount of work, the fact that we have all this data on this property is also unique, because you don't find a lot of properties that have this much data, whether it's blast hole data, drill hole data, production data. And, again, not surprisingly, the bulk of the drilling was all centered around the old pit because it was 7 grams per ton, so everybody was chasing that. But, the rest of the land package is pretty much a white map. We did in November of 2021 put in a bit of drilling here, because
Hmm.
our geologist, who's our president and COO, Glenn Van Treck, he had a theory about this, what's called the range front fault. So that's just east of the old pit, that it would have higher grades. And sure enough, he hit over 1 gram per ton, and so this is something that we would love to follow up on. But, we're a small company and we've been somewhat capital constrained. So, we have a bunch of ideas of things that we would like to do to continue to advance Sleeper, but it's a big property and it's something that might be better suited for us to approach with a partner, maybe under the right circumstances, divest of it completely. But it certainly has a lot of value that's not being recognized by the market.
Absolutely.
Yeah.
Interesting.
And yeah, um, we can talk about Bald Peak if you want. It's a much earlier stage exploration opportunity, but it's one we're pretty excited about. We unfortunately had to put the pause button on it this year, again, more for capital reasons. But, it's a property that we have that sits in a fantastic area. It's in Mineral County, Nevada. So Bald Peak is in this red outline here, and it's sitting on a parallel structure to what were some very important open pit mines, the Bodie, Aurora, and Borealis. And so, there were some very interesting surface showings at Bull Peak when our team visited. It at the time had an existing plan of operations on it, which was just somewhat unique, and it had never been drilled. And so, we were able to exercise an option to acquire this for a very low capital cost in the door. And then we have, milestone payments along the way. But I think the sum total of everything, once we've paid out over a number of years, will probably be a total of about $300,000. So, this isn't
Okay.
going to make or break the company. But, when we shot geophysics over it, and when we took our own surface samples, we took 44 surface samples. Every single one of them had gold in it, up to almost 11
Hmm.
grams a ton. So needless to say, there is a lot of enthusiasm to drill Bald Peak, and we now have
Sure.
drill permits in hand. So we're
Okay.
absolutely ready to go on it. And it's really just a question of when will Rachel be nice enough to loosen the purse strings and allow us to drill it. And,
Well,
I'm
yeah, let's
I'm
talk
very
about that.
hopeful. I'm hopeful it'll be next summer. Let's put
Yeah,
it
no,
that
let's
way.
talk about that though. I think you're doing the right thing. I mean, a lot of companies would do the opposite. They'll just pour money into the ground in this environment and they're not getting rewarded for it, right? Like, I
Oh, I
mean,
know.
you have to get a reward to shareholders to do that kind of drilling and I mean, to mess with your capital structure, right? Because I
Yep.
wrote down 66 million fully diluted shares. That's amazing. It's a great capital structure. So congratulations on that.
Thank you.
That's something you don't want to destroy, because that's what I'm seeing this year and last year. It's like more and more companies just don't get it. They don't understand that every time they put out great results, they're getting faded.
Yeah. Yeah. And I mean, and this has just been this sad situation for our sector over the last couple of years. And you're right, nothing is really being rewarded. And so if we have, two really interesting assets outside of our primary asset that are just waiting for the right time. It's not like milk. It's not gonna expire. It waits
Right.
for us for when we have either, the right partner in the case of sleeper, or, the right circumstances in which to continue to advance, then we will. But you're absolutely right. I mean, I see some great drill results coming out of companies with no market response whatsoever, and it's a pretty discouraging environment from that standpoint. But getting things as ready as we can so that then we can be strategic about when we take different steps, I think is really important.
Totally agree. And in the interest of time, let's talk a little bit about the gold environment, because you and I have both been doing this a long time, and it is frustrating that you've
Mm-hmm.
had gold this year, you know, trading over $1,900 an ounce for, I believe, about 5 consecutive months with not a single day under 1,900. That came after the March financial crisis, right? And now we've got this horrific news October 7th in Israel, and we get another floor on gold. And even today, where we opened down, pre-market down, terrible open, it returned right to a flat kind of close. I mean,
Yeah.
we're starting to see that gold is creating a new floor to me around 1790 to 1800, and it bounced right off of that right before Israel. I think it was around 1820, 1825, and just skyrocketed. If you remember October 13, we had our best single day in gold in
Yeah.
about 3 years. So I think there's a major disconnect between the opportunity in companies like yours and what's happening with the gold price and with interest worldwide.
Yeah, I completely concur. I personally have never lived through anything like this. I mean, I spent, 20 years working in capital markets on institutional sales and trading desks, and, lived through a bunch of different types of cycles. Never have I seen this type of disconnect between the stocks and the commodity. I'm of the view that we need perhaps a more consistent gold price for a longer period of time. Like maybe it's a psychological 2000 that we need to get through so that money comes back in. I mean, certainly there are no generalists in the space at all from what I can see. I perhaps, like some historic rallies, perhaps it needs to be retail led, because the institutions increasingly, I mean, between the benchmarking and other things, it's really hard for them, unless they're some longstanding believer in the space. It's really hard for them to allocate to a sector which is underperformed. And so if you don't have the flow of funds coming in, it's really hard for the stocks to move. And in a sense, you also have two separate pools of buyers. I mean, central banks buy physical gold. They, last I checked, they have not bought any shares of PZG, right? Or PZG, I should say, for an American audience, right? But the point being, you do have a bifurcation of where the buying interest comes from, the commodity versus the stocks. But the stocks are starting to, are representing tremendous value, from seniors down to the juniors. And, I mean, we're trading right now sub $5 per ounce in the ground. We bought Grassy for $10 per ounce in the ground and thought this is a great price, which it was, and it still
Yeah.
is. But now the entire company is trading at less than $5 per ounce. But unfortunately, it's the kind of market we're in, so it requires patience. And I think that too can be in short supply in this type of environment. And certainly it requires really people to do their homework and understand what they're buying, and understand that if they can be patient, I think they will be rewarded. And that is specifically about Paramount.
Okay. So when you're looking at this slide here, this is implying 66 million shares fully diluted, like I said, but then you look at the retail being at 70%, because there's another 30 that's pretty tightly held. You're looking at 46.2 million shares fully diluted, roughly.
Yeah, and what I would caution too is the fully diluted number includes the converts, so that would be
Okay.
another, just over 4 million shares in that. So that isn't, those shares don't even exist yet.
Yep. Okay. So
So that's
40,
why,
42 million. So
right.
yeah, that's why I think in the past this stock has seen huge volume spikes. That's one of the reasons, right? Because when you get a big buyer in there, they don't realize sometimes, this kind of a slide. And as you know, we both come from a capital markets background. Sometimes the buying is just handed over to some junior person who doesn't understand what they're doing. Even look at the price action today, right? Most of the shares traded at 32 and a half or north of that. It hit a high of 33 and a half today and closed at 0.2976 on very low volume.
Yeah.
So, again, I don't know how to explain that. We both are perplexed by that kind of action, but it's a buying opportunity. So we're going to buy more once this goes public. And I can't see the target that Jake has there, but that looks like he's a decent analyst. Do you have any other analyst coverage coming in next year, do you think? Or
You know what? I would love to. It's been a bit of a war of attrition in the analyst community in general. So we'd had three at our peak, I think, and now we're down to one.
okay.
Yeah, Jake's target is $1.75, actually. Um, and I am hoping. I mean, we're always trying to find new analysts to support us. I think what's tough for the analyst community is that they all have portfolios of stocks that have done nothing but go down, and everything is cheap. So it's hard for them to be, encouraged to pick up a new name. But my hope is that as we show the progress, as we deliver on these permitting wins, I think it will change the perception around Paramount, because I'd say, the single biggest piece of consistently single biggest piece of feedback I've ever gotten since I joined this company 3.5 years ago was Oregon's never going to permit a mine, And so I thought, well, okay, it's just a matter of time for us to prove you wrong. And so now we're starting to see those different pieces come into place. It will be undeniable that yes, actually they are going to permit a mine. Now what? Right now, all of a sudden, I think we'd be poised for a re-rating when these things occur. And so
Yeah.
really that's what we're hoping to be patient for.
And from my experience in looking at the permitting process, you're looking at usually a re-rating of 30 to 50% in a gold environment that isn't nearly this good.
Right.
So we're not suggesting that you're going to get that, but it is it trades on a good exchange, the Amex, right? Or NYSE American there. So basically, this has a lot of potential at these prices. I mean, you're trading 5.5 cents off the 3+ year low right now.
Yeah. Yeah. No, I know.
So
It's listen, that's our hope. And from our standpoint, I mean, we know what we can't control, which is most things, including the gold price and, permitting environment and so on. But what we can control is just keeping our head down and staying focused on, getting us over the line.
totally agree. So Rachel, great job with everything. Keep up the good work. I'm sure on certain days or weeks, it feels like you're pushing a 800-pound rock up a hill. And we all feel that way, the last couple of years at some point, because it's been challenging, but it's really encouraging to see that news in October. And to have that clock starting to tick next month must make you feel really good.
No, it really does. It really does. And, I think it will, like I said, I really hope that we're in a market environment that's going to reward this type of activity. And my general feeling is, even if it's not right away, it will be, because there are not a lot of permitted feasibility stage projects with the types of returns that we can generate from grassy and growth potential that are just sitting out there waiting to be built. So I think we'll suddenly fall into a new class, if you will, once we have these permits in hand in about a year's time.
I agree. Well, hey, Rachel, thanks a lot for coming on the show. This is John Feneck with the Feneck Commodities Report. And, if you have questions for either Rachel or myself, we'll have some contact details. There's Chris at IR. He does a really good job of supporting Rachel. And if there's any questions, Chris can answer them, get them to Rachel, or you can hit me up directly. So thanks a lot, Rachel. It was great to see you.
Thank you, John. Take care.
You too.